obviously, I don't really see so much downside either for the Asia market and also the Hong Kong stock market. As we all know, like the Nasdaq rebound like more than 30% in the first half of this year, but Hang Seng Index actually dropped a few hundred points. In terms of valuation, in terms of like the key reason behind why Asia and also Hong Kong stock market seriously lag behind, or I can call Hong Kong stock markets is one of the actually was one of the worst performing stock market in the world, mainly driven by the depreciation of the renminbi. As we all know, like inflationary pressure in not only Eurozone, not only in England, but also in US. Probably Federal Reserve will at least hike 2 times interest rate amount to like 50 basis point for the remaining year, and Central Bank of England as well. So in terms of the everywhere else central bank, they're still hiking interest rate. The depreciation of renminbi, it's something that inevitably. As well, and the Central Bank of China recently cut the LPR, interest rate to boost the economy. So the depreciation of renminbi is the key reason why the Asia market actually lag behind everywhere else. But recently, I do see a tendency that the renminbi may stabilize at this current level. And also, Central Bank of China instruct or advise some of the state-owned banks they have to cut the saving rates of the US dollars to actually stabilize the renminbi. So as long as the renminbi is stabilized, at least at this current level, definitely it will give not a big boost, but at least also stabilize the overall Asia markets as well as the market sentiment. So I do think that Hong Kong, the stock market will have some kind of room to rebound. But obviously, Hang Seng Index in the short-term perspective may find some kind of very key resistance at 20,000 points.